Hello and welcome to Your Trades with me, Ankur Mishra and Kavita Thapalial. In next half an hour, we'll prepare you what you should do for tomorrow, but we'll also analyze what actually transpired in the last half an hour of trade today, Kavita. And that was something which actually acted like a spoil sport.
Absolutely. The entire day we did manage to reach a high of 24,885 on the Nifty and 54,518 on Bank Nifty. But then the closing has been very flat for Nifty. We closed around 24,773, marginally up. But then sensex clearly closing very flat, with just 76 point up around 8787. But look at Bank Nifty, again a very marginal gains, almost flattish closing, what we can call it. But the leaders today definitely in the trade were auto, the index up almost 2.5%. Even on the gainer side, as far as Nifty is concerned, we can see Tata Motors closing around 4% up, M&M 4%, Bajaj Auto, iShares, Maruti Suzuki, all the auto counters were in up, in fact in full gear, in the top gear today. And even the market breadth suggested 1591 advances and 1243 declines. Talking about the broader market, small cap and mid cap also initially participated, but then in the last half an hour we saw mid cap closing almost 0.5% and small cap having a flattish close. Today in the trade, definitely IT was in pressure. We could see Infosys, Tech Mahindra, and all of these IT counters closing on red, almost down 0.5% to 1%. But then talking about reality, again in top gear, closed almost 0.5% up as far as the index is concerned, and a similar trend. In fact, a mild retracement from as far as metal index is concerned. It's closed marginally up, but definitely in the beginning of the session, markets as well as the sector specific action was in boom. But then the closing for today's trade has been very flat. But then what's up for tomorrow? Let's bring in our guest today. We have Ajit Mishra, Research Relegate Broking, to guide us with your tomorrow's trade. Ajit, hi, afternoon and welcome to the show. Last half an hour session, as Ankur mentioned, a spoil sport, but then market closed below 24,800. Now, how do you look at this closing and a very crucial level below which it closed?
Yeah, good afternoon, Kavita. Good afternoon, Ankur. So yes, the initial first half, in fact, for the most part of the session, we were, doing well. In fact, banking have also started, showing some traction. But by the end of the day, again, IT was anyways on the back foot, and with decline in banking, the entire theme again changed. Means as of now, Kavita, like what we discussed last week also, that until we see the alignment between these two key indices, banking and Nifty IT, I doubt that we can make any meaningful move over 25,000 mark, which is needed for the next leg of surge towards 25,250, 25,400. Meanwhile, 24,600, 400 definitely has become a strong base. But for any momentum, we need participation from banking and IT also. Other sectors, in the interim, one should be focusing for more of stock-specific approach. But when it comes to the index, the two key indices performance is critical.
Definitely, you mentioned about IT and banking, but what about FMCG? Do you think there is still meat in some of the FMCG counters where one can invest as based on the charts?
Certainly, Ankur, means FMCG, yes, we had a couple of days of strong up move followed by now marginal dip. But if you see that stock like Marico, which is still holding strong around the record highs, is something that one can continue to look to accumulate on every dip. Then we have Britannia also, that falls into that category, means almost retested its record high and then a marginal decline. There could be a bit of a profit taking or consolidation in the interim. From all these sectors, it's not only restricted to FMCG, which is sitting on the sidelines as of now. In fact, auto, which is outperforming the market big time, there could be a possibility that we might see some consolidation in days to come. But largely, if you exclude these two, banking and IT, rest of the sector, I believe that this continuation of rotational buying will continue. So you should definitely focusing more on buying on dips candidates among all these sectors.
What are going to be your picks and recommendations, Ajit?
Yeah, so my first recommendation is, of course, from the auto basket, considering the momentum that we are seeing. So Ashok Leyland, we have seen a fresh breakout with strong volumes. The stock is already at the record highs. So we expect this momentum to further continue, and 148 is what we are eyeing in the near future. So with stop at 132, one can accumulate Ashok Leyland at current levels. Then we have Glenmark from the pharma basket, wherein we have seen strong recovery. The stock has reclaimed short-term averages, now forming a base for the next leg of the up move. So here also we are seeing this momentum continuing till 2170 mark. So with stop at 1990, one can buy Glenmark also.
All right, Ajit, thank you so much for joining with your valuable suggestions. But with this, it's time for a daily segment of Chart Check where Srishti is ready and will give you which are the breakout or breakdown stocks. Srishti, over to you.
Well, yes, we have got two counters, one on the breakout side and the other one on the breakdown side. So the autos are definitely having a great day yet again, wherein from the OEM side, let's shift focus to the auto ancillary player, and that is Excite Industry on the charts. We have seen a very interesting move of over 4% jump coming in on this particular counter for today. And what was interesting to see is that the stock managed to break its resistance of 410 levels. There was an attempt earlier. The stock consolidated for a bit, did retrace for some time, and now seem to be again continuing its journey upwards. So that's Excite Industries on the charts. With this move is now seen to be trading above its key moving averages, and along with that we have also seen a long build up on the derivative side. So this is the first counter on the breakout side. Moving on to the next one, and that is a breakdown stock. The IT pack has been reeling under pressure yet again, and from that pack, Persistent System is what we have been spotting on the technical front, because as you can see is the fifth straight day of decline, and with this the stock is seen to be retesting its crucial support level of 5,000 rupees. That is indeed very interesting to watch out for, whether or not these levels will be maintained. But for now, the stock is seen to be trading below its key moving averages as well, and hence we thought to spot this counter, or rather highlight this counter as the breakdown stock. So these are the two stocks for today.
All right, thank you so much for those details, Srishti. Let's move on, and a mega exclusive chat with Times Network's Navika Kumar's Finance Minister Nirmala Sitharaman spoke about the GST reset, which will impact the lives of over 140 million people positively. After months of careful discussions, the government is delivering on the GST promise, addressing criticism and ensuring that revenue remains a priority. Listen in.
Let me also put before you some of the questions that have come in from our network channels, ET Now. Given the recent GST reforms shifting to a simplified structure of 5% and 18%, plus sin goods at 40%, how does the government plan to mitigate the estimated 48,000 crore annual revenue loss?
See, this estimate is based on the 23-24 year base year. And when models are made, estimates are made, they're made on a static data which is before you. But I expect that from 22nd September, since the tax deduction or reducing of the tax is across the board, poor people will be able to get more for their Deepavalis or Navratris. Middle class, which wants to have their aspirational goods bought, whether it is refrigerator, they have a small one, they want a big one, TV, small one, big one, will all be in the market to buy it, resulting in a better buoyancy. And that better buoyancy will help us somewhat, and I'm not saying with a certain voice, somewhat we'll be able to offset this calculated deficit or reduction.
So value may have come down, volumes of purchases will go up.
Absolutely.
How will you ensure that this GST reduction is passed on to the consumers? Because in the past, economists have said sometimes they haven't been passed on in toto to the consumer. Rather, it has increased the margins of corporates.
May have been in the past, not under Prime Minister Modi. And even now, we are talking with industry. We are, in fact, asked them that they should be surely passing this on to the people. And between the day when the GST Council happened and today, you would have seen that very many industries have come out to say, we will indeed pass it on. Tata Motors yesterday evening had issued, saying we will pass it on. There are many others who have come out. Insurance sector, public sector insurance companies have also come out to say we will certainly pass it on. So we will be not just being happy about the letters and their statements. From 22nd, I'll personally be monitoring the situation, that it is getting passed. I have had many people tell me from different parts of the country that it's welcome move. And in turn, I've told them, if it is not getting passed on, you must communicate with me. And I shall be on the ground to see.
Some people are, dealers are also asking the questions. For example, if there are cars where the slabs have come down from 28 to 18%, inventory stocks, how are they going to be looked at? Nobody's going to buy it, whereas the dealers got it at 28%. So how does that offset happen for inventories?
As it is, industry was telling me, even before the GST Council, in anticipation of a possible reduction in rate, people are not even coming to buy. Please, therefore, once it gets cleared, can you implement it sooner? Industry told me that. But I need time for the systems, the digital systems, the networks, all of them to be tweaked in such a way that the actual approved reduction in rate gets into the system so that when you get your bill, it is printed out with the new rates.
All right, that was Finance Minister Nirmala Sitharaman detailing that she will be personally monitoring that GST benefits should be passed on to consumers. But moving on, it's raining price cuts in the auto industry as players look to pass on the benefit of GST rate cuts to buyers, from Tata Motors and M&M to BMW and Mercedes-Benz India. Major players have announced cuts of anywhere between 90,000 rupees to 11 lakh rupees. When will these start kicking in? And who will be bearing the burden? My colleague Srishti joins with the whole roundup.
With respect to autos, a very interesting announcement coming in, and as expected, the companies have announced their price cut. Across the board, we have seen the price cut announcements starting from M&M. The price cuts as high as 1.6 lakhs across the model that we have seen. That will be applicable from 6th of September itself, and that's a very interesting move and a bit of a standout versus some of the other peers as well. Take a look at Tata Motors passenger vehicle division. Discounts as high as 1.6 lakhs across the range is what we have seen. Commercial vehicle too will have discounts up to 4.6 lakhs across segments. Hyundai Motors up to 2.4 lakh across models. It is Toyota as well, where discounts range as high as 3.5 lakhs. And along with that, some of these luxury car makers have also come out with their discounts and announcements on that, and that is ranging to BMW India, where the price cuts are as high as 11 lakhs, and even Mercedes-Benz up to 11 lakhs on select models is the price cut, is what these companies have announced. So across the board, we have seen the price cut announcements, definitely on the expected lines, but interesting to note that select companies like M&M, they are pushing the price cuts even before the effective date of 22nd of September. But the question remains that who will bear the burden if the price cuts are applicable before the 22nd of September? As per our chats with the dealers and the analysts, we do get to understand that it's the OEMs as well as the dealers that will share the kind of the price cuts that have been announced, and that is with respect to the compensation cess adjustments, because do remember the inventory that is still lying with the dealers already had that compensation cess factor, and that has to be adjusted, which will not be done after 22nd of September. And in order to clear and liquidate that inventory, this step is being taken, which is indeed very positive at this point in time. So a whole host of price cuts announcement by the auto companies, but the question remains, what happens to compensation cess?
Absolutely. Thank you so much for all those details. Srishti is definitely raining price cuts in the auto market ahead of Navratri. But Tata Motors has slashed prices across its cars and SUV range by up to 1.55 lakh effective September 22nd when the new GST slab takes effect. We caught up with the experts to decode the same. Listen in what they have to say.
I really appreciate some companies who have actually come forward and who are trying to share the burden with the dealers. I think it's a great way to go, but not every company has come forward, which means that the dealers need to bear the brunt of this compensation cess, which I think is extremely unfair. We've been talking about 21 days inventory in FADA for the last more than a year. And manufacturers have been dumping vehicles on us, which have gone to 55 days, in certain cases, up to 3 months. So we are not the ones who asked for the stock. The manufacturers have put the stock on us. So the onus also is on them to take the burden, the majority of the burden on this, or the stock and the cess available therefore, and help the dealers out.
So there are some OEMs, but very rare, who are coming forward and giving customers the benefit of GST cut even today, which is 14, 15 days before, so that if they have interested, they can buy that and it will help us reduce the inventory with us. It's a turnover game, not a per vehicle margin. We work at a very low, thin margin percentage. So covering 10% for any of us is difficult. So it's a joint effort where we are trying to insulate ourselves with this. Cess is a mess thing, but let's see, hope that things change with the government coming up in 2, 3 days or 4 days of our follow up on this.
All right, let's shift focus to a deal which has been on for a while. Vedanta has likely emerged as the top bidder for debt-laden Jayaprakash Associates, offering 4,000 crore payment post-approval by NCLT. Now, this payment is cash upfront, while the total amount is 17,000 crore. We have Ashesha with us to tell us a bit more about the resolution plan, when it is expected, and will lenders have to take a haircut?
Well, yes, first up, let's put the timeline into perspective for our viewers. Now, the Committee of Creditors is likely to take about 2 months to finalize the resolution plan. And once the resolution plan is finalized by the Committee of Creditors, NCLT approval could take another 8 to 10 months. In fact, reports also suggest that, remember, entire payout is likely to be completed by Vedanta if at all it wins the bid and NCLT approval is received. The entire timeline of payout will be in staggered manner. So Vedanta will have to pay about 4,000 crores once it receives NCLT approval, and the balance amount will have to be paid over a period of next 5 to 6 years. Now, as far as the total outstanding is concerned, Jayaprakash Associates has a total outstanding of about 56,000 odd crores. NARCL, Axis Bank, Bank of Maharashtra, Bank of Baroda, Canara Bank, ICICI Bank, Indian Overseas Bank are some of the lenders to Jayaprakash Associates, totaling to about 56,000 odd crores. Now, as far as Jayaprakash Associates' total portfolio is concerned, remember it has about 4,000 acres of land, 2,200 megawatt thermal power, cement plant, urea plant, and a whole host of other assets as well. In fact, as far as these assets are concerned, Nuvama says Vedanta's focus will continue to remain on core business, and they are likely to monetize other assets which they receive as a result of this resolution plan. Nuvama also says that they are unconvinced by the rationale to acquire group assets, and priority of the company should be on deleveraging at the moment. In fact, we also have a Citi report where they say that uncertainty around this news is likely to create an overhang on the stock in the near future, and they also believe that Vedanta will monetize some of their assets once the entire resolution plan is approved and the acquisition is completed. They also await clarity on the monetization plan. So yes, it's a long process. It is likely to take time, but brokerage houses believe that they will continue to focus on their core business, power in particular, and the other assets are likely to be monetized by Vedanta Group.
All right, Ashesha, thank you so much for all those details. We also have with us Rabinder, who is ready with the list of stocks which were buzzing in the trade. Rabinder, over to you.
Well, yes, JSW still very in focus in today's trading session, where company has announced their August month business update, and company has said that the crude steel production was at 27.03 lakh tons, which was up by 17% year-on-year basis, and capacity utilization at Indian operation stood at 95%. Apart from this, Morgan Stanley has also come out with a note, and they have upgraded the stock to overweight from the equal weight rating and high target price of rupees 1300 as compared to earlier target price of rupees 1100. Apart from this, some of the other steel stocks like Tata Steels and Steel Authority of India were also in focus, where Morgan Stanley has come out with a note on the steel stocks, and they have upgraded a few stocks. Like for Tata Steel, they have upgraded the stock to overweight rating from the underweight rating and hiked target price rupees to 200 as compared to earlier target price rupees 140. And for Steel Authority of India, they have upgraded the stock to equal weight rating from the underweight rating and hiked target price rupees 140 as compared to earlier target price rupees 105. Apart from this, on the back of the weak Q1 FY26 earning, SpiceJet were also in focus, where company reported a Q1 earning and company's revenue saw a decline of approximately 35% year-on-year basis at rupees 1120 crore as compared to 1708 crore. And if we talk about profit, then company reported net loss at rupees 234 crore as compared to a profit of 158 crore. And Nuvama has also come out with a note, and they have maintained their buy rating and cut target price rupees 40 as compared to earlier target price rupees 48. Apart from this, Adani Power were also in focus, where Adani Power and Bhutan state-owned utility Green Power has signed an agreement for setting up of a 570 megawatt